Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. More market headwinds from the Eurozone. We're going to talk about that with our guests this week, our Research Director Shiraz Mian, our Senior Stock Strategist Kevin Cook, and Market Technician Kevin Matris. So, with all the talk this weekend coming out of Germany about a Greek default, is it now just a question of whether it's an orderly default or a disorderly default? Is it a foregone conclusion that there's going to be a default?
No, it's not. We have seen this play out quite a few times in the past as well. When the so-called Troika, the European Central Bank, the IMF, and the European Union bailed out the Greeks agreed to a set of parameters and metrics that they would implement. They have been kind of dilly-dallying on implementing those, and each time the time comes for releasing another tranche of funds, we get to this stage. So it is not clear at this stage whether it's another of one of those high-stakes poker games between the Germans, who are sitting behind everybody else, and the Greeks. Seems like the Greeks have budged and announced another $2 billion property tax to kind of meet those. My sense is that in the end, the Germans lose far more if this unity framework for Europe dissolves or is damaged than the likes of Greece or Spain. So in the end, they will come around to standing behind the union, but it's not going to be easy. It's not going to be quick, and we just have to get used to these every month or every few weeks this reemergence of the fear that the Greeks are defaulting, and now the Spaniards are, and then there's problems with Italy. So the issue is not going away, but I don't think it's a sign that the European Union is dissolving.
Okay, well, the G7, Kevin Cook, had nothing to say about Greek default over the weekend, really?
Yeah, no policy action, and as Shiraz referred to it this morning, it's sort of a policy paralysis over there. You know, you go back to the financial crisis 3 years ago. In October of 2008, global central banks acted in a coordinated fashion, like 5 or 6 of them overnight, cut interest rates, bought bonds, so it was coordinated quantitative easing. We're kind of looking for that. Is the world behind the European Union here? And we're not getting that signal yet. It kind of makes me wonder if they think things could get worse, let equity markets, price it in, and then they'll come to the rescue. So we'll see. This rally we had last week, kind of a buy the rumor on the Obama jobs thing, took it all back, sell the news, right? But as of this morning, Monday morning here, the S&P level that I'm watching is 1140, and that seems to be holding. So, but if we go through that, equities are headed much lower.
Right. So, Kevin Matris, from what you're seeing technically, is the market pricing in a haircut on Greek debt?
I think the market is getting ready to price it in. I don't think it's fully priced in. I think that if we do go lower, as Kevin was saying, I believe that we could see the S&P get as low as 1,000, maybe even break 1,000 in the S&P. For me, I think if we got that low, that would be a good buy signal. But I do believe that if we do see a default or we see more hand-wringing about how this is going to go, I do believe that the market is going to be pricing this in. I don't think it is done doing so. I'm looking at a support level of 1,000 if we break these levels.
All right, well, this week we get some more economic data out as far as the U.S. economy is concerned. Kevin Cook, what are you going to be paying attention to?
I think the inflation data will be noteworthy, even though it'll be secondary to this crisis we're having, and equities selling off, and if fear takes over. But if inflation upticks, that makes it even harder for us to get out of this crisis, because then global central banks can't come in with more quantitative easing and fuel a worsening inflation picture.
Right. So Shiraz, are the two major headwinds now Eurozone and health of the U.S. economy? Is that what the market's dealing with?
Yes, it is. The question that the market's been grappling with over the past 2.5 months now is whether we were heading towards a recession or not. It appears that some of those nerves have calmed down a little bit, that even if there is a recession, it's not coming in the third quarter, maybe sometimes on the horizon. So the recovery is weak. We are looking at to the leaders, the president and Congress, to enact whatever the president came out with. And we are also looking at the Fed to come out with some more easing. And Kevin was right that if the inflation readings this week come out on the hotter side, it strengthens the hands of those dissenters on the FOMC who have been resisting further easing. I'll be more closely watching the industrial production and retail sales numbers that are coming out this week, and I think they will tell us more as to how the economy did in August, and that'll be reassuring in my view. But Europe could basically overtake even if we get positive news on the U.S. side.
Okay, Kevin M., you had something to add?
Yeah, I was going to say, I think that even if we do get good economic numbers this week, I don't think that it's going to be enough to save the stock market just yet. I don't want to be all doom and gloom, but I don't think Obama's jobs package went far enough. I don't think it's going to be enacted quick enough, and I don't think whatever comes out of Congress is going to have a big enough impact. And if everybody's waiting for the Fed to come in and rescue the day, I don't think it's going to happen this time.
We still don't know how that jobs package is going to get paid for. We'll find that out supposedly a week from today.
Right.
And we'll all be waiting for that. In the meantime, give us your top pick.
Real quick, though, about the jobs package, he did say that he was going to pay for it with some taxes down the road, and I'm sure the Republicans are going to put up a ton of resistance there, so who knows what's going to come out of there. Okay. Anyways, my pick is Las Vegas Sands,
all right.
Ticker LVS.
Throw the dice?
Yeah, they're in the gaming industry. They have operations in Las Vegas and in Macau. What's interesting is that most of their revenue is coming from their Chinese operations. China happens to be the strongest economy right now. Macau is one of the strongest gaming centers out there. And if you look at their stock has been held back because of the broader fears of the economy. I think that LVS is getting ready to break out. I've got a price target of $80, which, believe it or not, represents over a 70% potential return on LVS right now.
Okay, Kevin C.
Luminex, biological testing for life sciences. They have proprietary technology, they call it Lab Map, which can do over 100 bioassays, which are tests, to find new drugs, genes, test cholesterol levels. It can perform 100 tests on a single drop of fluid. So earnings-wise, they're just blowing it away here. They're going to 200% increase in earnings this year, 50% next year. They beat by 83% in August, and it sent the stock up from 18 to 24 on 2.5 million shares, when average volume is like 200,000. It's a small company, though. It's aggressive growth. You're looking at a forward PE of anywhere between 40 and 60. 900 million market cap and a PEG of 1.8. So this is aggressive growth.
Okay, that's what my doctor needs, another test to build me for.
I'll give you Tractor Supply. It's a hardline retailer, attractive growth attributes. They have about 1,000 stores. They plan to increase that to about 1,800. It's kind of rural-centric in its orientation, and the ag economy and the rural economy is doing relatively better than its urban version. And the growth metrics and the profitability metrics for Tractor Supply are some of the best in the hardline retail space. A very good buy for these times.
Okay, that's the latest from here. Keep an eye on Zacks.com for the latest thinking from these gentlemen and others on a lot of the headwinds that the market's going to be facing, and the economy for that matter. With everyone here, I'm Terry Ruffalo.